watching the newsroom right here on ET Now. I am Ajaya Sharma. Well, the markets are not giving up most of the gains, but they are trading near the flat line. Some negative news on the Reliance front, taking a market slightly down because of its weight. Till yesterday, the HDFC twins were also doing very well, so they are not participating today. But net autos have come back. Technology is doing well. Broader market too is not selling off, but they are maintaining with gains. But it's Friday, so some amount of profit taking is not really ruled out. But let's talk about how should one be approaching the market from an investor's point of view, from a positional guy's point of view. Sanjiv Bhasin is joining us on the show. Sanjiv, let me not talk about the here and now kind of a discussion with you today, but someone who's been, listening to you for a couple of years. Even if 3 to 4 years people have been listening to you, they must be sitting on very reasonable amount of profits in their portfolio. There is also some itch now emerging the way mid-cap end of the market has really gone up very high or very sharply. An average mid-cap bought must be 3-4x already. So what would you assign to people who are sitting on very rich profits and there is some amount of, kind of urge to take some profit taking? What's your view? How do you stand on profit taking as a strategy?
Yeah, good afternoon, Ajay. So great. We are at all-time highs, and yes, the bouts of pessimism and the bouts of the feeling of missed out is huge. Profits are generated over years, but the last 18 months have seen profits which are not there in the last 5 years. And lo and behold, equity continues to be the most favored class. There are three things. People are taking lightly the EU bond buying, which has a huge liquidity wall. The Fed is going to be more easy given the new spate of Delta variants in the US. And in India, we are not facing the, we are missing the woods for the trees. Corporate India has been on a tear, whether it's IT, pharma, banks, autos, so they are ready to go. And you are at the anvil of a very big festive season and, holidays and so on. So I think the reopening is still to be factored in. Maybe the index, at 16,400, 16,600 is, going to be the temp, but it's all about stocks. And Ajay, you should read my list. Mid caps are not anywhere near, a topping out. They are at the beginning of a big cusp. So the mid cap rally is here for 2 years. They've weathered the storm well in the last 5 years. And now they are only telling you that, you've shifted the men from the boys. So if you do book profits, remember that getting back into equity is not an easy, easy operation. So if people sold at 14,000 thinking that the top to re-enter at 16 is very difficult. So stay the course. This is not a bull market which is going to end in a jiffy. It's going to take some time, and we still think there is money to be made, in the next 2 years.
Fair point. No, it's a very fair point, Sanjeev, that if you don't need the money very urgently, then let the profits run. And as you see that the signs are all coming together, that it may be a more prolonged bear market. I was just asking this question on behalf of a lot of people who do talk about this possibility to us. Let's talk about how the portfolio construction should be. You said that the festive season stocking up will also kind of bring in some a lot of animal instincts out. So manufacturing, consumer durables, electronics, what are the sectors where you really, or even automobiles, the numbers have started improving around the festive season or pre-festive season stocking up? Which are the sectors on your mind?
So Ajay, I'll name 5-6 stocks which are some to do with the consumption, some to do with infrastructure where I'm very bullish, and some to do with retail growth. Top of the line would be Titan. I think Titan numbers are way ahead of what people were imagining. Even in a 45-day, 90-day lockdown, they managed 45 days. They managed their retail book very well, even though showrooms were the worst state. And their digital platform has taken out like wow. So 2250, 2300, even though it looks very expensive, it will go there. You can write it down. Titan would be my top play on the festive and the D. Second would be on the IT space, which has been the best bellwether, HCL Tech. I am now very bullish on mid caps, and in mid caps in autos, Ashok Leyland is going to take the storm. You've already seen an order of 22,000 buses. Ashok Leyland is the third largest bus maker in the world. It has 53% market share in India. I'm looking at targets of 175. Bandhan Bank has gone through all the chaos of Assam and so on, but they've held their own. This time the margins are obeying back to 12-quarter highs. Bandhan Bank has got 2.5 crore, accounts with it, and with the World Bank prerogative on microfinance, they have changed their book from uncollateralized to collateralized. So I think they are going to have a very sweet process in the next 18 months. I'm looking at targets of 450 on Bandhan. I'm also very bullish on the media space. Z promoter has sold what he has to. He just has 4%, which means he's not the owner. Z as a business at 18,500 crore market cap cannot be so cheap. It's a steal. So I'm looking at a target of 300 plus in that. And my last dark horse is a name called IRB Infra. You know, these were the worst hit names because of road building and known receivables and, Coney capitalization on the political front. But this is a pedigree stock, 18,000 kilometers of roads, top player in the golden quadrilateral, in the EPC book and the recoveries. I just went to Simla and by default, all your hurdles are over because everything is fast track. Their recovery process and, the reopening. Ajay, you won't get plane tickets. When you travel by road, you will be happy if you just pass through the toll bridges. So I think this stock is headed to 350. Now, these are all be India and more India specific on the model of the businesses. As a disclosure, our clients are having position, so you can take that as a disclosure.
Right. Sanjiv, Ashok Leyland is a very interesting one. They have recently announced their entire fleet gradually to be turned into alternate fuel as well. So they are moving quite fast there. What are your thoughts on Tata Motors? How long do you think it will meander around this level before it could go back to 360 odd? It could test their all-time highs. Even Maruti, for that matter, is quite lower compared to the all-time high that used to be.
Correct. So I just mentioned Ashok Leyland because we are very gung-ho on them, given that they are the second largest CV player. You came to Tata Motor, rightly so. Don't look for 360, look for 450. The problem is one quarter where the semiconductor chip market has dampened the sentiment, but they are saying the demand is going to be even more stronger. Maruti sold in July 1,72,000 vehicles. So how can you go wrong? You're just talking of maybe October onwards, again, things coming back to stream. So you are right. I would again advocate a sip in Tata Motor and Maruti. I think you're going to be surprised at the upside. I don't rule out 10,000 coming in Maruti in the next 1 year.
Another two laggards of financials, Sanjeev, I wanted to discuss with you. HDFC Bank, HDFC Limited, and even Kotak for that matter. I was looking at the YTD or 1 year graph of these three financials versus, say, SBI or even ICICI or Axis. They have massively underperformed. Do they offer margin of safety in your view, or do you think you would want to be with SBIs of the world?
So Ajay, that's a very good pertinent point. In the last 6 months, we've seen a transition from the large cap leaders rather than HDFC. It's become ICICI, Axis and State Bank. And rightly so. HDFC went through its problems on the digital technology and some of their credit card, but that's coming back. You cannot ignore the largest bank in the private side. I think 1450, 1430 has been a good entry point. So if you are looking for slightly longer, HDFC will regain its mojo. HDFC Bank, HDFC came out with standout numbers on the mortgage side. So we have a buy on HDFC, the mortgage company. We think 3,200 over there is definitely on the cards. And like we said, this is an opportunity. These are pedigree names. I must also mention HDFC Life. That has underperformed in the last 3 months, but I'm very bullish on the management and the pedigree of the business in insurance, which HDFC Life, enjoys.
What are your thoughts on real estate, especially big city-based real estate companies? Godrej Properties is one you've been vocal about. Any other names in real estate which you like?
So yes, as a disclosure, Godrej and DLF have been two of my top picks. 165 was DLF and 760 was Godrej. They more than doubled, tripled. I still think, Ajay, you cannot have gold at 50,000 and index at 54,000 and real estate cheap. You won't believe in Gurgaon, the appreciation in land is already 40%. And I think that the next 3 years belongs to real estate. Also in that, the pedigree names, Godrej Property, DLF, who has, transitioned himself into the most transparent company, given their exposure on REITs, will be enjoying their, their pedigree names and the space which they own. So you are right. We are very, very bullish on real estate now. Given that I wanted to give new names, then these stocks have already run up a lot. I didn't mention them, but both those are core portfolio holdings.
Right. All right, Sanjeev, always wonderful chatting with you. You fill us with so much of energy, great stocks, and you broaden our horizon. Even if you're sitting on good profit, let them run, because this bull market is not ending in a hurry. Always great chatting with you. Thank you so much for your time today.
Thank you, Ajay.